don't forget to subscribe and to hit the bell to get our latest notifications.
And in case you're doing this for the first time, you have the chance to win one of the Bose noise cancelling headsets. Each month we're giving away one of them. Take your opportunity and win the Bose noise cancelling headsets. Welcome back on the WatchAdvisor and YouTube. It's Alexander speaking, your host, and with me today is René Weber, analyst at Vontobel Bank, Luxury Analyst. Welcome, René.
Welcome, Alexander.
You are at home, I suppose?
Yes, it's now my 12th week in home office, so a little bit difficult. I'm missing Zurich, but how is it in Vienna?
Not bad. I can quickly wait. Zoom makes it possible. There we go. I have a virtual background. There it is. It's the Parliament and the famous Ringstraße. And yeah, if you want, I can leave the background of
It doesn't matter for me, though. It's a nice one.
Yeah, I think so. Yeah, the Parliament House. René, the reason we are talking today is you've been publishing some analytic stuff concerning the Swiss watch industry, of course. And give me a little bit of an overview. How is the industry actually doing? Not good, that's for sure, but how bad is it?
Yeah, I think the last numbers we had was Swiss export coming out of April, and as expected, it was a total disaster. We never had such kind of numbers, but obviously it was clear as everything was closed, stores were closed, the production spaces were closed, so the numbers were minus 81%. And yes, since I'm in that business, I never heard a number like that. The interesting thing was that all the markets were down by 90% or even more. So in Europe overall it was more than 90%. But the only one country which stand out a little bit was China. China was just down by minus 16%. And I think that already reflects a little bit the openings they already had.
I didn't get the word, 16 or 16?
1.6.
1.6, okay, 1.6.
Yes.
Thanks.
So it was much less of a decline than the other markets. Also, Hong Kong was down minus 83%. The US was down minus 86%. So it was really a bad month overall. And probably...
So one could say the only performing market in the moment is China.
Yes, that was the case in April, and probably in May we will not see much of a difference. Some markets have started to open up, and therefore I believe that April with minus 81% was the worst month we have seen, and now the coming months should start to see a little bit of improvement, but still May will be down by more than 50% again.
Yeah, shops have reopened also here in Vienna, but still people are not, of course, in a good shopping mood, and the tourists, mostly the tourists, are missing. We had a good start. I think you told me when we were on the phone a couple of days ago that also in Zurich, in the first days, you saw a lot of people doing some shopping, but supposedly these were people who, had to do some shoppings due to birthdays or other occasions, and so but we
even had some queues in the Bahnhofstrasse, the main shopping area. So at Louis Vuitton and Cartier, both shops had a queue in front of the store.
We had the same. Louis Vuitton was a queue. I saw it. It was incredible. Obviously, a lot of people are picking up something, buying something, or had to buy something for relatives, friends.
Yes, exactly.
Yeah, but in general, it's still very slow, and we are. It will take some time. If you dare to make an outlook, what would you expect for the next months, year, and so on? What is your outlook?
We are estimated in the beginning of April a decline for the Swiss watch export for the full year of minus 25%. Obviously, currently that looks even a little bit optimistic. We believe that May now will still be above minus 50, but then month by month we will see an improvement. But of course, it's a big difference in the different markets. So I believe that China will even come to positive growth again. But on the other hand, you will still have strong decline, especially in Hong Kong, as this unrest continues. And more important for Hong Kong, but especially also for Europe, there are no tourists, especially no Chinese tourists. And I think the first Chinese tourists probably will see in autumn, October, but not before. And we just had today the numbers here in Switzerland. So for April, we had coming out of China 21 tourists.
21 tourists.
21. The year before was 10,000. So, but also at the number of India was 34 tourists coming to Switzerland in April. And obviously in May we will see the same. And as usually during May till October, we have more than 100,000 Chinese tourists here in Switzerland. Yeah. It will be missing, and therefore they will have probably decline of 40-50% at least here in Switzerland.
Incredible. 21 tourists coming from China. Wow. And I have no idea how many there were here in Austria and in the other European countries, but I assume it's some kind of same figure.
Yeah. And I guess these are officials, probably even not from business, but just from the government side.
Do you think that there will be kind of a Chinese New Year next year? Does this make an impact for them traveling back to Europe, to Switzerland?
Yeah, usually Chinese New Year is not an important traveling season. The Chinese come to Europe mainly between May and October. And therefore, between November and March, there are not a lot of Chinese here. So you see big differences. As I mentioned last year, the April was 10,000 coming out of China. And now and last year we had for example, in July, 130,000. So there's a big seasonal difference.
So it's not Chinese New Year that will make the big change in 2021.
No, I think the big change will be that they are coming back. I still believe that we will see Chinese tourists again next year, not this year, but I'm sure they will continue to come back to Europe and also to Switzerland.
Yeah, and all the other countries traveling around, of course, but Chinese are those who are the driving force for the retail, because they are those who really buy heavily. And when you see the figures of tax refund, you see the difference. That's really amazing what they are getting back in tax refunds compared to other countries.
Yes. I think interesting is also when you see a little bit the change in the countries of the Swiss watch export. Now, for more than 10 years, we had Hong Kong as the number one. Even in 2019, despite the decline we have seen in the recent months, already in 2019, they were still the number one. I can see now after 4 months, US is now the number one, and China is almost the same size as Hong Kong. And you can be sure already in May, China will be bigger than Hong Kong. And I believe that China could become even the biggest market in 2020.
I see. Interesting. No one would have thought such incredible changes when we look back at the amazing figures. Hong Kong was always the kind of the watch supermarket for the entire world, more or less.
Yeah, I think for example, in 2011, 21% of total exports went to Hong Kong, and now we talk less than 10%. So that clearly has seen a big change.
That's a dramatic change, in fact. Many of my friends, and I think the same will happen to you, I do ask you, who will not probably survive the crisis in terms of brands? Are there brands endangered to go bankrupt or simply to disappear? What would be your estimation?
Yeah. I think when you look to the big names, everybody knows. So if you look to the top 25 brands, I'm sure none of them will go bankrupt, because the majority of these brands are owned by groups, LVMH, Richemont, and Swatch Group. Out of the 25, we have just 8 brands which are independent, and all these independents, which is Rolex, Patek, Audemars, Chopard, Breitling, all of them do not have an issue either. And therefore, you will not read that some of the well-known brands will have some issues on the financial side. I believe it's much more for the smaller brands where there could be some problems. Some of them have also the problem that on the distribution side, it's getting more difficult for them to get any space with the distributors. And especially, I think, with the retailers, we will see also there a similar situation that the large ones, like Bucher, like Wempe, like Watches of Switzerland, they will clearly survive, no issues at all, but the smaller ones will disappear. And then again, for the smaller watch brands, they will have less possibilities to get a space in these watch retailers. And so it will be much more for the smaller an issue, not for the large ones.
How much of the current business do you think can be replaced by e-commerce that was done or is done in a classical way so far?
Yes. Well, when you look at the total luxury goods industry, we always talk about 10% of business goes with e-commerce. That was in 2019. Of course, it was now much more. When you look to the Swiss watch industry, probably it's less than 2%. So it's a very small, tiny part of that business. But due to that change we have seen now, that will become much more important. Watch of Switzerland just mentioned that number. They had an increase in e-commerce of plus 46%, where the other markets, of course, did not exist anymore. But I think if the stores are opening again, we will see again that people go back to the stores. They still want to see the watch. But yes, overall, e-commerce will become now more of an important distribution channel than it was before. It will be driven on one hand by the brands itself, with their own homepage, but on the other hand, also the retailers have pushed strongly with their homepage, like Bucher, like Watch of Switzerland. You see them much more now in e-commerce than you saw them 2 years ago.
And probably also by the brands themselves, by pushing certain limited editions to the internet and forcing people then also to buy through the internet, and so generating traffic there.
Yes, exactly. That's a good way for them. Of course, it's not something which is welcomed by the watch retailers, but for the brand itself, that's something which can drive their e-commerce platform very much.
Astonishing enough is also when I look into your report that the amount of the brands above 3,000 Swiss francs manufacturing price. It's not the price you pay in the retail store, but the segment plus 3,000 is increasing, and all the other segments are decreasing. So, would you estimate that this development will continue in the future? And do you also think that the segment below 3,000 will little by little be, let's say, eaten by the Apple Watch or other smartwatches?
Yeah, I think that's exactly the point. We have seen that already for the last few years. The only growing part, which has more than doubled in the last 10 years, was the high end. On the other hand, the low end, which we talk about, retail price of 200, 300 Swiss franc, has halved since then. And so we talk now, if you just look for the total pie, we have 69% comes from the high end, whereas the low end is just the 4%. And that was 10 years back or 15 years back, it was more than 10% coming from the low end. And I think the main point you mentioned is the smartwatch, and I'm sure that will continue. I think an Apple Watch, also Garmin, Fitbit, which is owned by Google now, I think they will continue to have good growth, and therefore it's clearly not a reason to have one of the low-end watches coming out with a Swiss-made. I think people much more will like the smartwatch than the just Swiss-made low-end watch.
Do you think it's a trend that brands now try to move up in retail price to be more safe, to be more desired? Is this a strategy you can use to compete against, let's say, the lower smartwatch thing?
No, I think that's not really a strategy. I think it depends on the brand. You cannot bring up a brand like Tissot into the high end or Longines. They have a very good position in their price points, and therefore it's just much better if you already have the brand which is in the high end. And I think in the last few years you have seen the high end brands still doing very good business, whereas the low end went in the other way around.
But Longines, if I look at some of the figures, is 1.65 billion. So it's one of the big four players of the Swiss watch industry. So I don't think that there's any risk for Longines. They seem to be positioned correctly, and the product seems to be fair priced, and there seems to be enough market for them to healthily survive, not survive, to healthily stay there where they are.
Yeah, Longines is, as we call it, the upper end range, and it's the clear leader in that upper end range. And therefore, yes, they have their position. Same is true for Tissot. Tissot is in the mid end, as we call it. They are the clear leader in that market. And so, yes, they have that position, but it does not make sense for them to move up to the high end level.
Okay. Well, what would you say? What must happen? The tourists. We talked about the tourists, and what about local customers? What should happen, or what do you think must happen that the local customer is back in a good shopping mood?
Yeah, of course, it depends very much on the different markets. And so, for example, if you look to Hong Kong, they have roughly 80% of their business is coming out of mainland China from tourists. And there again, there are no Chinese tourists at all. It was minus 99% in April. And you can see that in the watch retail numbers in Hong Kong, that was almost minus 80%. So therefore you have some local people buying there. But still, without the Chinese, Hong Kong has strong declines. Here in Europe, it's a little bit different. Some markets depend much more on Chinese tourists. So Switzerland is one of them. They have probably 50% of their business coming off the Chinese. But still, they have the local clients. The US, which is an interesting one, they also have the majority of their business, probably 90% is coming out from domestic demand. And then, of course, China. China just has local demand. There is, I'm sure, no tourists who buys a watch in China. And therefore...
Could change, you never know, huh?
Yeah, as long as they have the luxury goods tax, it's still too expensive to buy the watch in China.
You never know what the government is doing. Once they change their rules, maybe you don't know.
Yes, yeah, that's clearly the possibility. Right now, it's still the case. China is more expensive than the other places. That's the reason why the Chinese tourists are buying here in Europe or buying in Hong Kong.
Mm-hmm. Last question. On a scale to 1 to 10, 10 is optimistic and 1 is pessimistic. Where would you position yourself actually?
If you go for 2021, I'm on 8.
Okay.
Because I think that what I learned in the past when we had a crisis, and I just look back, let's say 10, 15 years ago, we also had a decline of more than 20%. The year afterwards, we had an increase of 22%. Okay. And so we also, as I mentioned in the beginning, we estimate minus 25%, but for 2021, we already expect an increase of plus 15%. So not to the same extent as we have seen a decline, but at least I think that the numbers will clearly come back to the other levels.
Then let's hope.
Yes, of course, it's also hope.
I would have said the same, 7 or 8 at least for 2021. For this year, maybe not, maybe 5, 4, but you never know. Maybe once people really come back, get out, are moving again and get back in a good mood, I really hope that we're all spending money. Our states need to earn by the value-added tax money, and so let's all hope that people are going back and spend money, and this is part of the economy, and as you know, most of the states make their earnings out of the value-added tax, so that's what is necessary, actually.
But I think interesting, and probably you can help me a little bit more on that, the new watches which came out, mainly now through internet and with you also made a lot of movies, videos on that. How did you see that kind of launches?
I have to say, steel watches are very popular in the moment, and watches that are positioned in a traditional segment that are like the new Jaeger Master Control. This is something I was amazed how this new Master Control was received by watch collectors, and all those in the steel segment selling anything that is comparable to a Rolex steel watch and so on is looked after. I think a little bit more difficult is for all those who are in a very conservative or very conservative segment. I don't think that these watches in the moment are really sought after too much. That's my impression for the moment. But there are very good new lines and watches coming now to the markets that have potential also to find their way to their natural habitat on the wrist of the people. I think it's possible.
Yes.
We have to see.
No, I like the novelties as well. And for me, of course, I missed the meetings at Basel World and in Geneva. But yes, at least you could see them now a little bit online.
True. And everybody who's watching, stay tuned on WatchAdvisor and YouTube, of course, and all on our other social channels, social media channels, because we are bringing the news to you, as I just did with René Weber, who is a luxury analyst at Vontobel Bank in Switzerland. René, thank you very much. And
welcome.
Most important is your optimism on the scale 8. This is very good. So there is hope, and there is something we can look forward to, and I also believe that 2021 will bring us pretty much back in a normality, as we say, and yes, let's hope. Next time we will meet in Zurich.
Yes, we do.
I insist, 15th, in only a couple of days, we are allowed to travel back to Switzerland and vice versa. The Swiss can travel to the other European countries, and so this will bring me back to Switzerland, and I'm very much looking forward.
We welcome you.
We maybe have a nice dinner at or lunch, and I'm looking forward.
We do.
René, thank you very much.
Okay, thank you.
Bye-bye.
Bye, Alexander.